Okay, so a lot of you are familiar with Fibonacci already. How many of you, okay, so we've got a 1 for everyone who's familiar with it. Give me a 2 if you actually use it in your trading. Point 2. Okay, cool. All right, now 1.5, Brian Davis. Okay, now give me a 3 if you have no clue what I'm talking about. No, I'm kidding. Give me a 3 if you're not familiar with Fibonacci at all. And this is going to be your first time learning about Fibonacci. Do we have any 3s in the house? 3 would be, yeah, I've heard of Fibonacci, but not really sure what it is. Okay, I've got at least 1. Good. Mike Teague. Hey, Mike Teague, how do you not know Fibonacci? A pro trader like you. I'm kidding. Mike's an awesome trader and even better guy. We had a great time hanging out in Croatia together. Lovely wife. So, okay. So let me just start by Fibonacci, and it's a mathematical sequence. We'll get into that in a second. But the really crazy thing about Fibonacci is that, yes, it's a mathematical sequence, but it exists in nature. And it's crazy to think that this thing that you can actually put on your charts and use to help with your trading is something that is naturally found in nature. Okay, so right here, okay, just giving you some examples. Buttercups have 5 petals. 5 is a Fibonacci number. Lilies and iris have 3 petals, another Fibonacci number. We're talking about 8 here, which is sorry, let me turn off my phone. 8 is another Fibonacci. Corn, marigolds, 13. That's another Fib number. Asters have 21, where daisies can be found with 54, so 34, 55, even 89. So those are all Fibonacci numbers that just exist in nature. And it's crazy that if you think about how, and they're talking about flowers, but it's also seashells. So flowers, fruit, leaves, seed heads, right? And this is, so if you want to dive into, I'm not going to spend a lot of time on this. I just think it's so cool how the Fibonacci numbers exist and they show up in nature. Pine cones. I mean, pretty much anything that you've been exposed to is some type of a Fibonacci sequence. They're talking about leaves here, or leaf arrangements, vegetables and fruit. I mean, it's crazy. So anyway, how does that help you though in trading? So let me go ahead and get it up a whiteboard here real quick. If I can find I'm going to stop sharing for a second. Okay. And now let me get to a whiteboard. Okay, why is my whiteboard not showing up? Interesting. Maybe we don't have it activated on the on this. I'm able to do it when I do my mentorship groups. Now, that's not to say that I'm able to do it well on my mentorship groups, but I am able to do it. But I don't even see the option for whiteboard. Okay, let's switch gears here for a second. Let me open up a Word document real quick. Give me a second. Technical difficulties. Okay, and let's blow this up a little bit. Okay, so let me go to new share. Okay. And every time I do this, my chat disappears too. All right, give me a 1 if you can see just my blank Word document. Perfect. Okay, I'm just going to type a couple things here. It's nothing nothing critical, but I figured I didn't put together a slide deck for this presentation. I figured I would just do something on here. All right. So how do you use the Fibonacci's in your trading? Well, you can use Fibonacci's to pinpoint entries. Okay. So you can pinpoint entries with Fibonacci. You can also, and that will be with Fibonacci retracements, and we'll get into that. You can also use Fibonacci's to establish profit targets once you're in a trade. Okay. And then you use those Fibonacci profit targets in conjunction with your R's, right? So if you're shooting for, 1R, 2R, 3R, you look to see how those might overlap with the Fibonacci levels. And again, we'll dive into some examples of it. You can use the Fibonacci's to establish support and resistance levels. All right, so I'll show you again. I was doing this last night with my mentorship group, and it was pretty amazing how some of those levels actually carried over. So I'm talking about levels that we were looking at from 2 years ago that today are actually providing some support and resistance levels. You can combine Fibonacci with RSI. Okay, so you can look at the Fibonacci levels, and then you can also pull up your RSI. You can look for overbought, oversold levels, and then also look for divergence. Okay, and then I'm also, during this presentation, I'm going to give you a couple of additional Fibonacci levels that are not standard levels that you might want to consider adding. Okay. Okay, so we already talked about that Fibonacci's is a sequence of numbers, okay? And the sequence of numbers for Fibonacci, and by the way, Fibonacci was an Italian mathematician. So in case you weren't aware of how that name came about, Fibonacci was an Italian mathematician, but this sequence of numbers starts with 0. So you start with 0. Make this a little bigger, make it easier to see. Okay, so Fibonacci, you start with 0, and then you go to 1, and then you add those together, and 0 and 1 is 1. Now you add 1 and 1 together, you have 2. Add 2 and 1 together, you have 3. 3 and 2 together, you have 5, and 5 was one of those Fibonacci numbers that they talked about with the flowers that had a certain number of petals, right? And then you go, the next number would be 8. Next number would be 13. Next number, 21, surprisingly, right? Is that a surprise that in gambling, specifically blackjack, 21 is that number that they use? Then from there, 34, 55, 89. Again, these are some of the numbers that came up during the when we were reading about the flowers. So anyway, I won't continue this, but you get the idea of how these Fibonacci numbers are formed. So this is the sequence of numbers, and then it can go on for infinity, right? The numbers just keep going. You just keep adding and adding and adding. So the main things that we're going to be looking at are Fibonacci retracements, if I can spell, and we're going to be looking at Fibonacci extensions. Okay, so Fibonacci retracements. Let's talk about Fibonacci retracements. That is I'm going to show you how you use that in your trading to establish an entry. And so once price has made a certain move in a direction, you can then throw on the fibs and try to target an entry, right? So with the concept that you don't want to buy high, you want to buy as low as possible. So you want to buy on a retracement. Or when you sell, you want to sell as high as possible. So you want to sell on a retracement. And we're going to talk about how you can use these levels for your entries. And then the key levels that we're going to be looking at for the fib retracements, okay, are 38.2, 50, and these are percentages, okay, and 61.8. Those are the main ones that we're going to be looking at: 38.2%, 50%, 61.8%. Okay. Then on the extensions, the key levels you're going to be looking for there are, you're going to start with 100% on the extension. So I'll explain what that is in when we get to it. Then 127.2, 161.8. And then beyond that is a big jump to 261.8. Okay. So those are the main Fibonacci extensions that we're going to be looking at. And then we'll also talk about how you can use RSI in conjunction with all this. Okay. So, so these fib extensions are very helpful in swing trading. So all of these that we're going to be talking about can be applied to swing trading and day trading, but the Fibonacci extensions really are helpful for once you get into a swing trade and trying to establish, okay, how far can this run? And so we'll get into just looking at some charts. Okay. So let's go ahead and let me give me a second to prep my chart over here. And then I'll do a different screen share. Okay. So let's take a look at, give me 1 second, almost there. We're going to, okay, let's go to a different screen share. All right, give me a 2 if you can see my chart of SPY. Perfect. Awesome. Okay. So let's just take a look. And this is random. I don't have this. I'm not like, I didn't have this planned out. I just happened to pull up SPY and that was here. And I just went towards this one area. Okay. So let's take a look at SPY. Let's look at this area right here. Okay. And let's say SPY made a new high right here, 479.98, came down and it bounced out of that. Okay. So let's just start playing around with the Fibonacci retracements. Okay. First of all, so new high, throws in a hammer. You're thinking that, the market has, been just running bullish. We're expecting some type of a pullback. We don't know how, we never knew how big of a pullback it was going to be. It's been, but anyway, we are looking for a pullback. So here's the Fibonacci retracements on Thinkorswim. You can also go into drawings here, and then under the drawing tools, there's the retracements here and there's the extensions here. Okay. But I went ahead and there's a way that you can pin them to this bar up here. So I just have them pinned here for easy access, but you should be able to, any of your trading platforms, you should be able to find these tools in. So I know TradingView has it and there are others. So whatever platform you're using, you should have access to these tools. So let's say SPY pulls back here, throws in a hammer, and you're thinking, okay, let's see where this can come up to retrace to. And again, this is random. I'm just picking this just to see. So when you're doing the retracements, now here we're going short. We're thinking maybe short. So here what we're going to do is we're going to go from the high down to the low. Wait a minute. Let's back that up. Yeah. Let's go make sure I got the right one. Yeah, I have Fib extensions. Okay. For our retracements. We're going to go low to high. I mean, high to low. Okay. Now, if I zoom in here, you see that price retraced. Okay. Let me first touch on the key areas that I talked about: 38.2, 50%, and 61.8. Those are the known key levels that all retail traders are taught, they look at. And the main thing to consider is that these are not specific levels as much as it is a zone. You want to think of these Fibonacci retracements, that 38.2, 50%, 61.8, as a zone. And so anywhere in that zone, if you saw some type of a signal that price is going to start heading the other direction, anywhere in that zone is where you want to look for that signal. So if I draw a box right now, okay, so right here, this is the zone. Okay, and you can see it actually came back. And what I want to point out to you is there are two levels that I have thrown in here that are not common levels that most people don't talk about. Okay, I've zoomed in for a purpose. These levels that you want to, and you can add these to Thinkorswim. You should be able to add them to, you should be able to add these to any platform, is 66% and 78.6%. I'll explain that in a second. Let's see, how do you choose time? You can do this on any time frame. It doesn't matter. You can do this on a 5-minute, 15-minute, 30-minute, 1 hour, daily, weekly, monthly. The time frame does not matter. You can also do this if you're doing multi-time frame analysis. So for instance, I use a 5-minute, 15-minute, a 30-minute chart early in the morning, and later in the day, I'm using the 5, 15, 30, and 1 hour. You can do the fibs on all levels and see if they're in alignment together. And I'll show you that in a second. When do you go from when do you go top down or bottom up? Yep. So on this example, okay, so I'll explain it real quick and then I'll go back and show you. Okay. So when you're doing your fib retracements, and I'm going to give you plenty of examples of this, so hang with me. But when you're looking for a bullish position, you're going to go from low to high. When you're looking for a short position, you're going to go from high to low. So in this example that I'm giving you, we went from high to low, but I will zoom back out here in a second. But I want you to make note of this level, the 66% and the 78.6%. Okay, those are not levels that are typically in the default settings. So in order to be able to change that, if you right click on the fib and you hit edit properties, you can go in here and you can click on add curve, and I'm already at my max number. But if you click add curve, you can create your own levels. Okay. So again, the standard levels are in here, right? The 38.2, the 50%, 61.8. These ones that are in red, okay, I added those and I color coded them red to know that those were the levels I added myself. Those are not default levels. Those are specific levels I added myself. And the reason for that is I had been told that the institutional traders, okay, the big money, everybody knows, again, all retail traders are taught the 38.2, the 50, the 61.8, but that's all just the education that we receive. We are given those because those are the default numbers that all of these platforms have. What I have been told is that these, the institutions actually will use that 66 level. Okay. And again, if I zoom in here, you can see here's the 66 right here. And then also this 78, 78.6 right there. So I've been told that they use those levels because oftentimes the retail traders will put an entry somewhere in this area, like let's say in this case, you're doing a blind limit sell. They will put a limit sell in this area anywhere from between 38.2 and the 61.8. And then they'll put their stop just above the 61.8. And then what happens is that price will actually, the institutions will push price through that level, trigger people into the trades, all the retail traders who have set up their entries inside this zone. And then they run the price to the 66 level, which then hits everyone's stops. Then they bring it down. So I had no idea that when I randomly grabbed this, that was going to be the result of this pullback. I thought it was going to be more like a 50%, but there's a great example of where price retraced to the 66% level. Anybody who went short in here and then put their stop just above the 61.8, because that's what we are all taught as retail traders, they got triggered into the trade. They got taken out of it as it went above. And then once it got to the 66% level, then it dropped. So the 78 level up here, right? Why is that important? And what is that? 78.2, I believe, right? 78.6. Why is that level important? Well, again, back to what I was told about the institutions is, unlike the retail traders who will put their entries in this zone and then put their stop just above the 61.8, they will put their entries here at the 66 and then put their stop at or above the 78.6 level up here. So pretty interesting that in this example, that's exactly what happened. If you got in here and your stop was just above 61.8, you got triggered in and your stop was hit. But if you had entered anywhere down here, but you had your stop up here above the 78.6, you would have been okay in the trade. Any questions so far on that? Very sneaky. Yeah, it's extremely sneaky. But that's the tricks of the trade, right? Those are the things that the institutions know that we don't know. So let me go back to and it's a Dave and then SOK after. I assume it's just Dave. Is that right? If Dave is paying attention, is it just Dave? Yes. Okay. So let's give you another example list, Dave. So what I did on here was, again, I just randomly went to the high from SPY, and then I went down to this low, and I wanted to see how far price would retrace before it resumed to the downside. And so all I did was I clicked on my Fibonacci retracements. I went, and again, we're thinking short. So I went from the high, I just clicked on the high, and then I went to the low. And that's what gave me the retracements. Right in here. See that? So that's if you're looking to go short, okay? Let's take a look at another example. Okay, let's say you missed this move, right? You missed this one, and then this move happened. You're like, I didn't get into it. Let me see where I can get in. So again, this is just random. I didn't even look at this beforehand. But if we go from the high to the low, if we zoom in here again, look at it. Right here, right into that 66 level, right? Did not penetrate the 78.6, happened twice, even on a gap up, right? Came right up into that 66 and then rolled back over. So I'm glad I found these examples, because that 66 level, like I said, that, as Brian said, that is a very sneaky level, because it's not something that a lot of people are aware of. All right, let's now take a look at a bullish. Let's try to find a bullish example. All right, let's look at this area right here. Okay, so bullish example from here, Dave. Now, because we're looking to go long, we're going to click on the low and then go to the high. Okay, so, and again, you're going from the most recent low to the most recent high. So let's say you missed this move here and you're looking to get in, and somewhere in this area here, you're thinking, you know what, I want to get in a SPY long, but you're looking for an entry. You don't want to, again, you don't want to buy up here. You want to buy on a pullback, right? Because everything, nothing goes straight up. Everything goes up a little bit, comes back, or goes down a little bit and comes back. So you never want to just get into something as it's moving straight up. You want to wait for the pullback. So from here, we're just going to click on the low. And we'll go up to the high. And came right into that 50%, right? So it goes right back into that zone before it starts moving back up. See if we can find another good example. So I'm working on a small screen here, so I have to kind of shrink everything just to be able to get a feel for. You know, here's, you know, I'll just show you an example. Sometimes, you know, it doesn't always work, right? I mean, not everything works all the time. So Dave, yeah, I mean, it's like I'm not going to hover over top of the candle and get the exact numbers. I mean, I can just you know, get a feel for it, right? But let's say, so if I were going to do this again, this Fibonacci retracement, here's this most recent low, right? And then here's the high. So let's say you were looking at this and you're looking at where can I get into a pullback, right? So if you click on this, the low, and again, I'm just eyeballing it, and then I go up here to the most recent high. And then if you look here, now what's interesting, if we zoom in here, this candle right here, this was the pullback before it went up, and look, came right into the 50% retracement, right? 50% retracement, and then it bounced. Okay, now the bounce failed and it came right back down, and you would have been stopped out. But the fact that that is the level where it bounced, right? Where it tried, at least where it tried to bounce. Brian says, do you use this universally from any low, high pivot area? So, or are you targeting a wave? No, so you don't, you could do this in conjunction with the wave count. You don't have to. Brian, I'm just randomly pulling levels out. Just, you know, I'm just looking at the chart and I'm just randomly grabbing areas. But yes, you could do this in conjunction with the Elliott wave if you wanted to. Let's see. Let me go to, let me get out our SPY for a minute, go to Roku. This was something we were looking at last night. Okay. So again, here's a recent low, right? If you look at this run, price came up here, kind of went sideways here, right? So if we go from this low, and again, Dave, because we're looking to go long here, we're going to click from the low, and then we're going to go to the high. And if you look, price came right into that 50% retracement. So how do you play this, right? That's probably a question you might have. So you can do just a blind limit buy or a blind limit sell in that level, right? You could go say, I'm going to, you know, I tend to lean towards the 61.8. So I do miss quite a few of them because the 50% is like a really good level. And I'm trying to think who somebody, sorry about that. I guess the market's closed. There was somebody in RLT, and I'm thinking it's maybe Bob. anyway, he always used the 50%. And that was his level. He just used it consistently day in and day out. And that's where he would look to set up his limit buy or his limit sell, was right at that 50% level. And again, you could use it intraday. So he would use it using it on a 5-minute chart. Let's look at this one. Okay. That was that one, that move. This move here, from here to here, right? Most recent low to the high, right into that 50. Right. So again, you could just do a blind limit buy there, or you could wait for some type of a signal. It's up to you. But this is just to show you that how, you know, it's amazing how well this works, and that price does respect, and it uses those levels at 38.2 to 61.8, and then again sometimes at 66. So let me show you now. Let's before we move on off of the fib retracements, any questions on that before we get into the extensions? No questions so far. Okay. Now, how else could you use this? We talked about that these can also be used for support resistance levels, right? So let's say you're in this trade and price comes up here, and let's say you've been in it for a while and it makes a new pivot low, it comes up here, makes a new pivot high, starts to pull back, and you want to figure out, well, where am I going to place my stop? Well, you know that it likely can pull all the way back into the 66 level, right? So instead of having your stop all the way down here below the pivot, you could at least move it up into here, right? And that's not an obvious place if you're looking at the chart, right? A lot of times they just talk about, well, just use the pivot lows. Well, let's say price does come all the way back. Do you want to give up that amount of profit from here down to here, right? That's, you know, almost, 30 points here, right? So you can use the fibs if you're, let's say you're in a swing trade. And I think that using the fibs for your stop levels works better on the swing trade level than it would intraday, but still you can apply it intraday as well. But here again, why not, if you're trying to figure out where to put your stop and you're quite profitable on this trade, but you don't want to go down below this last pivot because you don't want to give up all that profit, you can watch this, and as price comes down here, you know, you can have your stop below the 78.6, and you can be watching the price action here and look for some type of a reversal signal. And if you don't get it into this area, you know, you could tighten up your spot, your stop, or you could just know that, you know, at least you protected some additional profit along the way. All right, let's talk about the Fibonacci extensions. Okay, so let's go back to this example. Okay, let's say we looked at this one before and we know that this pulled back into the 50, right? Let's say that you set up this trade and you got triggered in on here, right? So again, if we looked at the fib retracement, now we're going low to high. Let's say that we got in, we did a blind limit buy here off the 50, and we got into this trade, right? Now, where's it going to go? Okay, let's pretend again that all that price action following that move has not happened, right? All this up here. But let's say we get into the trade, we get triggered in here after we used our fib retracement here, and we got triggered into the trade, and now we're trying to figure out, where can this go? What are my targets going to be? Well, of course, you can use your R system. You can use a 1R, 2R, 3R, whatever you want for the R, but you can also use the Fibonacci extensions. Okay, so on the extensions here, so different than retracement, you are going to use the Fibonacci extension tool, and you're going to put it on where it's similar to doing the Fibonacci retracements with one extra step. So here you're going to go from the low to the high, and then you're going to go back to the low again. Okay. And what this does, if I can get it to grab. Okay, there we go. What this does is this throws on target levels for you. Okay. So if you got in down here and you are trying to figure out your targets, well, you could throw on those extensions. And the very first target where you might want to take some profit off, because could this make it a double top and then roll over? Of course. So if you decide, okay, I'm in this trade, I want to hold it as long as I can, but I also want to take profit along the way. I don't want to just hold, every share, or, whether you're doing options or shares, doesn't matter. Let's say you decide, and for me personally, I like to leg out of trades. I like to leg into them. I like to leg out. So if I'm in a trade like this, I do want to take profit along the way. I'm not trying to hold every single share for as much as I can get out of it. Okay. So first level where you might want to take some profit would be the 100% retracement. Okay. So let's say if you got into here, right? And let me, for 1 second, I'll just put it on for a second, then we'll take it back off. Okay. So let's say you got in here and you got in it. I'm just going to drop it in a trend line here real quick, just so we have a, okay. There's your entry. And then let's say you did just use your stop using the 78.6. Okay. And so down here, 78.6, you said, okay, here's my stop. So let's get rid of that. Just to make it easier to see. Okay. So here, you can see if that was your entry and that was your stop, the 100% retracement would have been probably 1.2, 1.4 R, right? It's a little over an R. So if you're going to hit that level, why not take some off? So that's your first area to take a little profit. Now, what do you take off? I don't know. You can take off 10%. You can take off 20%. You assuming that you want to be in this for the long haul, because we're at that point, we were in a strong bullish uptrend. So maybe you take off 10% here. Okay. Your next level, your next target level is this 127.2. So the lines that are in red are what I use for my targets. Okay. So the first one is the 100%. The second one is 127.2, right? And you would have hit it here. And again, maybe you take off 10% here, maybe you take off another 10, or maybe you get a little more aggressive. Next level after that is 161.8. And then you could take some off here. And then ultimately, you'll see that it makes a big jump here. But the next target beyond the 161.8 is the 261.8. Now, it didn't hit it, but that would have been the ultimate target, okay, if it was going to run like that. Now, what could you have done here? Well, you could have used once you got above this 161.8, and, and look at this. I mean, that's how many R's is that? Like 3 or 4 R's up to here? I'm just eyeballing it. Let's say 1, 2, 3, maybe 4 R's, if that was your entry and your stop. Now, and let's also look, what's interesting is we already put a fib on this level here, right? So from here to here, and this was back to the 50, right? So if your stop at this point was here, right? Using, if it started to pull back and you threw your retracements back on there, right? Your stop now is right here, right? If you want to use that 78.6, instead of leaving your stop here, your stop is now up here. So no matter what, you're going to lock in maybe 2R, right? If your stop is up in this level here. And it did pull right back into that 50, and then it went back up. Once you get past this 161.8, and all through this process, you can use a trailing stop as well. You don't have to just use these fib levels. You can use the you could use a 2-bar trailing stop, a 3, whatever you want to do, especially, when things are moving like this, and you get this big candle here, right? And look at this volume, right? So as it makes a new high, right? This is, again, one of the things I always talk about and I look for is you get this big bullish candle after this major bullish run up, big bullish candle, lots of volume. That to me is a sign, if I'm in this trade, I'm going to tighten up my stop, because that's to me is a signal that price is about to reverse. Okay. And if you're above the 61.8, why not just tighten up your stop and have it up here? Try to hold to see if it goes to the 261.8, but if it doesn't, at least you're protecting your profits. Any questions? The chat is very quiet. Okay, good so far. Good. Thank you for putting something in there, because I was just about to say, okay, give me something in the chat just to make sure that I didn't lose you all. Okay. Let's now look to the downside. Okay. Let's say you were in this trade and then Roku starts rolling over, right? So now it's like, okay, it rolls over, you get taken out of your trade. Now you're looking to get in now short, right? Because it's starting to break pivots, right? It broke this, it kind of held here and it bounced out of here, but then you get this big bearish candle and you're thinking, okay, I think that it's going to roll down. So it does roll down. Let's say you missed this move because you were thinking that maybe this double bottom would hold and you missed this move. So now you want to get in short and you go, okay, well, I missed this move. I had already been in this long. I made a great profit here. Double bottom, didn't hold, got taken out, but I missed this move and I wasn't going to chase it. So I just let it happen. Now I'm going to get it on a bounce. So here you hit your fib retracement, high to the low. Look where price came into, wicked right into the 50% retracement. Perfectly. Right. And again, these are not canned examples. I'm randomly pulling these up. This is not something, not entirely true. This particular spot on Roku, I did not look at last night, but I did look at Roku last night, a couple of different spots, but not this one. But this is, if you play around with it, if you back trade this, you'll see how well it works. So let's say here you get into the trade, right? So now you miss this move, you throw in a limit sell, and you could also add into this the volume profile, right, for confirmation as well. Whatever you want to use. Again, we talked about RSI, which I'll pull up here in a second. But let's say on this move here, you miss this move, you throw in a limit sell here, you get triggered in. You're like, all right, now I'm in the trade, and I crushed it. I nailed that entry. My stop was up here. Where can it go? So now what we want to do is throw on the fib extensions. Okay, we got into the trade here. Now we're going to go back to the same level that we started with for the retracements, high, low. Now we're going to go back to the high. Okay, so when you're going short, you're going to go high, low, back to the high, and that throws on your targets. Okay, so first target again would be 100%, right? Gets down here and it pushes through, but that would be the first place where I would look to take some profit. Came right down and it touched that 127.2. You would have taken some profit here as well, right? So take some off here, take some off here, and maybe at the 127, maybe you at least have your stop. Your entry was here, so maybe your stop is somewhere in this area. This was a pretty big candle, so maybe you put your stop above this candle here. Or if you're using I often look at talk about using I love using a 2-bar trailing stop, right? So on this day here, let me zoom in a little bit. Okay, on this day here, right now, none of this is formed. On this day here, it hit your 127.2 level. You would have had a standing order there to sell a certain number of shares. just like you would have here at the 100% retracement or extension. You would have had a order, just standing order to sell some, or I'm sorry, to buy to cover, right? You sold to open, now you're going to buy to cover. You would have bought to cover some down here. Now, stop wise, right? I'm a huge fan, and those of you who have been with me in my mentorship groups, you know I love a two-bar trailing stop. Well, what does that mean for all of you who are not familiar with that? Rules are pretty simple. If you are going bearish, the candles have to keep making lower lows and lower highs. So if you just look at this run of candles here, right? Let's say, well, let's just start with this. Let's say you got into this trade here, right? And then, you know, price kind of, you got to make a lower low and a lower high compared to this candle in order to move your stop. Well, here clearly it didn't, but here it did. It made a lower low, lower high. Well, if you count back 2 candles from here, 1, 2, you're still at your entry, right? You haven't moved at all. Next candle comes in. Okay, you can't do anything because it didn't make a lower low and lower high. This candle, and now we have to work off of this candle. This is the one that we're focused on now. This candle does not make a lower low and a lower high compared to this one, right? This one comes in. It does make a lower low, but it's got a higher high, so that doesn't count. Finally, we get this candle coming in that makes a lower low clearly. Now the high of this candle was 361.35. The high of this candle, 361.48. Okay, so we can't move our stop yet, right? Because this candle, we have to break the lower low and lower high of this candle. What's this, Tony? On your fib extension, you pick 3 points. I thought points 1 and 2 are, say, the wave 0 on Elliott. Honestly, Tony, I'm not I'm not doing the fibs in conjunction with a wave count, right? So I'm just randomly picking highs and lows, right? For a certain, you know, run of number of days, whatever those pivots are. I'm picking on this example, I was picking a pivot high and a pivot low. I wasn't doing it necessarily in conjunction with a wave count. So I'm just doing this completely on its own, separate from a wave count. So back to this candle did not make a lower high, so we still can't move our stop. Finally, this candle comes in. Now, again, we're still working off this candle. We have to make a lower low and a lower high compared to this candle. None of these qualified. This candle finally does. After this candle closes, we can count back 2 candles, 1, 2, and our stop can go up here. So did it move a lot? No. Well, this was our entry, but now we basically can move our stop to break even. Actually, a little bit in the profit. Okay. This next candle comes in, clearly doesn't qualify. This candle comes in. Again, we still have to break the last candle that we used. Finally, this candle comes in, and we do get a lower low and a lower high in relationship to this candle. Count back 2 candles, 1, 2. Well, the high of this candle is lower this one, so I would put my stop here. So again, you're just kind of stair-stepping your stop down. On this candle, lower low, lower high. Yep. Your stop still stays where it is. Count back 2 candles. This candle comes in, lower low, lower high. Yep. Count back 2, 1, 2. Now your stop is here, right? So you can use all of these things in conjunction with each other, right? So that's just a way of protecting your profit. So in this particular trade example, you would have taken some profit here, some profit here. Your stop after this candle would have been here, right? And that still would have been maybe an R of profit from your entry and your stop. So just a way, using that 2-bar trailing stop is just a way to try to maximize your gains while protecting your profits, right? So protecting your capital, protecting your profits is key. All right, any questions? No questions. Cool. Hang on 1 second. I'm going to grab a water bottle here. All right, Brian Davis loves it. Thank you, appreciate it. So Brian, that's what we talked about last night in the group session. So you're getting you can go back and watch that recording, but you can also just you're getting it here. So okay, let's talk about let's see. Let's go to one more example. This one, I'll see if I can find the example I was trying to find last night. We looked at one last night that was interesting because it aligned with some levels that we're dealing with now. I think so. Let's just zoom in here a little bit. Okay. So again, let's say this is a bullish uptrend. It makes a nice move here, right? Go from the low to this high here, right? Didn't quite come into that zone, right? Just missed it. Thought it was pretty sure it was Amazon that we were looking at last night. Okay, let's look at this one. Okay. And the other thing is you can also, what's interesting is you can throw on multiple fib lines, right? You don't have to just use one. Like you can throw on multiple fib lines, and when you throw on the multiples, if they overlap, they're stronger levels. So you can pick a bunch of different highs and lows and throw them on there. And then if you have overlaps, then that is a stronger area. Let's look at this one here. Okay. So this move right here, okay, came right back to the 50% retracement, right into that right here. Didn't quite make that 61.8, but made the 50% retracement. So again, you can back trade this. I mean, it's amazing how if you just randomly just pull up the chart and just start throwing it on. Let's see this one here. From here to here. Right? This move here comes right down, right at the 61.8, right here. Came up, came right back down. So again, talking about how you can use it to pinpoint entries, but also how it will give you an idea of where you should find support and resistance. So here, you went low to high. You could have had a blind limit buy right here, 61.8. You get into the trade, it double tops. Again, you would have thrown on your extensions. That would have been probably your first, close to your first level, right? Didn't quite make a double top all the way, but close enough. Comes back down, and then again, finds support right at 61.8. I want to try to find, there was an example here on Amazon. I thought it was Amazon where it was let me try the fib extensions here. I'm not gonna be able to find it. There was, anyway, it was kind of cool. So all these lines that you see here are current price action, right? So this is, Amazon is obviously one of the ones that we're using for the 10 EMA strategy. And these two lines here, when I was throwing these the fib extensions on last night, whatever points, I can't find the exact points that I was using, but these aligned perfectly. So it was, and I'm talking about throwing them on way back here, right? This is back in 2020, right? Threw these on here, and these lines where price is currently holding align perfectly with that 261.8 level when I threw on the Fibonacci extensions, when I was like trying to figure out, okay, where can price go here? And I'm just not seeing exactly where oh, there we go. Okay, it must have been that level right there. So the example I was giving last night, I said, okay, let's say you got into this trade here, right? And you like pull back, you get in, you're like, oh, I know I was looking at, see this consolidation? I was like, okay, well, makes this move up, and then you get this nice consolidation, and then it pops out of it, right? So all this pressure building, and then it starts moving up. And let's say you got in, say you took the breakout of this, right? And you threw on these fib levels, and you threw on the extensions to see where it could go. Well, here's that 261.8 level right here, right? And then what I was looking at was when you scroll through here, right? It was resistance here, the 218. Then it became support. And if you go scroll all the way over to today's price action, now that 261.8 perfectly aligns. This is the monthly 50 EMA right there. Yeah, with this 4. So that's the monthly 50. So that from just doing those fib extensions from back in 2020, that's giving me a level that perfectly aligns with this 50 on the monthly. Then if we go over to where the current price action is, right? Look at here how that 261.8 level established resistance here. Price came back down, came back up, hit that level again, got rejected, came back down. Again, that level says 261.8. It's hard to read it. But again, once again, hit it here, got rejected. Now, current price action is sitting, here's that 261.8 level sitting right on top of it. And that's a level that I established from 2020. Just using the Fibonacci extensions. So anyway, it's a powerful tool. It's pretty remarkable how it works. Okay. Let's talk about using it in conjunction with RSI. Okay, so let's go back to look at some of these examples again. Let's go back to Roku. Just because it's easy to spot those areas on Roku for me. This move here, right? So again, if we throw in this, we went from this low to this high, right? Came right back down in the 50. So now let's throw on the RSI and see what the RSI was looking like at that time. All right, I know I just added it. Hang on. Did it not add it? I thought I added it. There it is. Okay. There we go. Okay. So Kyle says, if you're going to set a blind limit by 618, would your stop be? No. So, Kyle, are we talking about on that last example when looking to go long? So no, it's the buying zone, okay, or selling zone, depending. It doesn't matter whether you're going long or short, right? The level is, think of it again as a zone. It's between, it's 38.2, the 50, and the 61.8. Okay, that's all one zone. So what I was saying was the stops are the 78.6 level. Okay, now I'll show you this in a let me zoom in here. Okay, so on this example, okay, Kyle, on this example, again, I'm sorry, my screen is so squished. We threw on our Fibonacci retracement tool on here. We did let's say we did a blind limit buy right here. Okay, and this would be the 50% retracement. Okay, your stop would be down here at the 78.6 level or below it. Right, so the zone where you're looking to go long is anywhere between 38.2, and again, I use the 66. That's my own level that I add in there, right? So between 38.2 and the 66 level, that is the buying zone. So you, again, in this example, if you just happen to use the 50% retracement, you could have gotten triggered in here. You're stopped down below the 78.6 level. Okay. Now let's look at this level here. Okay. So RSI, right? Overbought, oversold. You can see, right? So is everyone here, is everyone here familiar? Give me a 1 if you're familiar with RSI. I know a bunch of you are, but is everyone familiar with RSI? Yep, getting some 1s. Yeah, I know a lot of you are. Okay. Give me a 2 if you are not. Let's go that way. Give me a 2 if you're not familiar with RSI. Cool. Kale. Awesome. I'm not really. Okay, Kyle. Perfect. Okay. So RSI. Okay. RSI, all it determines is levels that are overbought and oversold. Okay. So the default settings, this would be the default settings here. Okay. So I didn't manually change these. These are just the standard settings that you will get when you pull up RSI. Okay. And I know Woodshed uses RSI a lot. So the idea behind RSI is it will tell you levels when price is overbought and oversold. Okay. So if you were in this trade, or let's say you were setting this up, right, and you threw on your fib here, you can see clearly. So let me back up. RSI, overbought, oversold. The levels, the key levels here, and I'll draw a line. Okay. The oversold level, it's not going to be exact, but actually I can probably edit that. Is 70. And then that's the overbought level. And oversold is way down here at 30. Let me squish this up a little bit. Okay. So when you are using this in conjunction with RSI, you can see how a couple of the examples that we use right here, right? You can see if you're looking here, price gets up here, it makes a, right before it starts to roll over, you can see that it got overbought, right? So when something goes above that 70 level, it's considered overbought. If it drops below the 30 level, it's considered oversold. So when you are using this in conjunction with the fibs, you can, if you throw your fib on here in this move, you can see that right up here, you can see that it was overbought. So what does that mean? Well, when it's overbought, all it's telling you is it doesn't mean for sure that it's going to retrace, that it's going to pull back, but it is something to be aware of, that because look, price can stay overbought and oversold for a long time. I've seen it, but typically it is an indication that there's going to be a retracement. Okay. So when something is overbought, you can expect price to pull back. And that's exactly what happened here. It got above the 70 level here. It was overbought and it pulled back. Now, when it hit this 50% retracement, it was more at a level that is, closer. So it's right towards the middle, the median between overbought and oversold. Right. So that's where you would be looking to get in. And again, if it got way down here and, was hitting this 78.6 level down way down here, then it likely was going to be oversold at that point. Okay. So you can use this overbought and oversold RSI in conjunction with this to go, okay, is this a likely area where it's going to pull back? And sure enough, it did. Kind of a small crash course in RSI. Now, I will tell you what's interesting is I know Woodshed uses it a lot, and he looks for divergence. So what does that mean? Well, it means, let's look here. Nope, that came back down. Okay, this is a slight divergence, okay? So when you get a divergence, let me zoom in a little bit here. Okay. If you look at this high here, right? You have, at this point, Roku was making new highs, right? It was overbought, considered overbought. Pulls back slightly, not really. It just got right back into that this normal zone, and then it went back up. Okay. But now look how much higher price is here. Okay. How high price is here compared to here. But look at your RSI. If you do a trend line here, go from the high of this level of the RSI, right? And you go over, it might be hard to see, but that is actually slightly down. Even if it were completely flat, that's a divergence, because price is making higher highs, but the RSI is actually either even or it's dropped slightly, right? So that is an indication of a divergence. Now, if we go take this one step further, sorry, I'm messing with my, follow this along, okay? Now, once we got up into here, right? Here, where price is making now highs, okay? Before it completely rolled over, look at where RSI is here compared to here, right? Now, if we do this, now if we put this on here, and all I'm doing is just connecting the points, right? The high points of the, you can clearly see that this is going down, even with my stretched out screen, you can see that this line is declining, yet look at what price was doing, right? Price was going up while RSI was going down. So there's a divergence. So you can use the RSI in conjunction with the fibs to see if you were overbought and oversold. Kelvin, does that help you? Kyle, those of you who weren't familiar with RSI? Awesome. And I got to say to everybody here, Kyle Bennett, this guy, he was in a mentorship group of mine. It's so funny because I was going back and I was looking at some of my recordings from a mentorship group, and I don't know, Kyle, this was what, several months ago, right? This was I think back in June, I want to say, like May, June, something like that. Yeah. So anyway, I'm going through one of the old recordings, and Kyle's there, and he's, he was one of my in my group, and Kyle's talking about how, he's just trying to wrap his head around everything, and he's trying to, develop that chart vision, and he hasn't taken any trades yet, but he's it's all starting to come together. And I don't know if all of you follow, but Kyle is active in our chat every day. He's actively trading. He's crushing it. He's doing great. But anyway, it's so nice to see somebody who, several months ago was, not even sure about, clicking the buttons and taking a trade. And now you're actively trading every day. Anyway, I love it. Hats off to you, Kyle, because you're doing great. Keep going. Drinking through the fire hose. Love it. Well, and then of course there's Brian Davis, who is just a phenom. He's insane. This guy, what he's learned in a short amount of time. So Brian started trading in March, and any of you that have heard me talk about him, he's just phenomenal trader. Started trading in March. This guy, I don't know, Brian, what do you have? 1,400 hours under your belt right now, something like that. Just a great example of what time, dedication, putting in the reps. I mean, this guy's, what did you get? 15 R's last month. He's just crushing it. But a real testament to what, the hard work and the dedication and the reps will give you. So, okay, let's take a look at, I'm curious, let's fast forward here. Let's go into current, let's look at, let's take a look at, let's go to Amazon, just out of curiosity, right? I don't often have RSI all the way, I've got like one of my charts, but I don't use it quite as frequently maybe as I should. Oh, wait a minute. I got to go back and remove those drawings. Hang on one second. I just realized I didn't remove these. And as I'm looking, I just realized that those levels are on here. I just couldn't see them. Hang on one second. Oversold because it was yellow. Let me change that to red. Overbought. I'll be able to see them much more clearly. Much better. Okay. So what's kind of cool, notice how I did that, and see how, if I zoom in here, notice how up here when it got overbought, see how it turns red up here? Right here. See how when it gets above there, that line goes from, like, I don't know, whatever that is, gray or black, to red. Anyway, interesting. Okay, so let's take a look at Amazon. And let's just go into this current area that we're trading. Again, I know this looks like a mess of lines, but it all means something, right? Those are all the moving averages and all that. So when I go into my intraday, I can easily see my levels, like, right? So if I go into a 5-minute chart here, just switch to a 5-minute, I'm able to easily see that all those lines represent different moving averages on the higher time frames. So anyway, back to, let's go here and let's look at, see if there's any divergence that we can spot, right? So yep, so here, right? So we got up here at this level here and we were oversold. Squish this down a little bit. You can see here we got right above the oversold area. I mean, I'm sorry, overbought, not oversold. We got overbought right here, right? Now, if we zoom in here, when we got to this point here, we were overbought. Now, when it made this high here, just on the 16th, see the divergence? Price was going up, but RSI was going down. Again, what does that indicate? Well, that indicates that there's a likely pullback coming. And sure enough, look what happened. So where do you look to get in? Well, you look to get in, you look to buy when price is oversold, right? So where does price get oversold? Let's take a look. So, I mean, definitely down here, right? When it made the low, it was, zoom in here a little bit. Squish this up. Okay, so now here's what's interesting, right? Came down here, and if you see here, it was oversold. Now price came down here. Now here's a great example of a bear trap, right? It breaks that low just by a little bit, breaks this low just by a little bit, and then goes up. But also, if you'd had RSI up, right, you would have recognized this divergence, because here, when we made this low, we were oversold. But when we made the low here, we were actually slightly at that line or above it. So here we were below the line, but here we were just on top. So here, right there is a divergence, because this would be going slanting up, right? That would be angled up, whereas price was going down. And what happened? Sure enough, price jumped, right? Price bounced, came back down here, made another bottom, right? So almost like a triple bottom here. And then again, if you look at RSI, here it's below the line. Here it's at the line or slightly above. And here it's, again, at the line or slightly above. So RSI is interesting. I mean, it's one of those things where look, I would hesitate to say, here's the pitfall for new and developing traders, right? You don't want to overload your chart with indicators and stuff, right? All this is not meant to, necessarily be traded off of, as much as it is to just give you an idea that something may be coming, to expect something, right? So the problem with having all this stuff on your charts is that it can lead to paralysis through analysis, right? The more stuff that you have on there that you have to make sure, is this in alignment? Is this in alignment? But RSI is actually a pretty, I know Woodshed trades off RSI frequently, and he's using it when he's trading the futures. Now, here's another great example, right? Here's this double bottom. Price comes down here. If you look here, it was down below this red line. It was oversold, right? We come down here, we make a new low. So double bottom, we make a new low, but yet price is just above the oversold line. So there's your divergence right here. So what can you expect, or what can you anticipate or look for? Well, here's exactly what happened. Here's the divergence from the previous low. Right there. This line is going up, yet price was making a new low. So there's your divergence. Yeah, there you go. Brian put it perfectly. Check your bias, confirm, and execute your plan with enthusiasm. Absolutely. All right, so there's an idea of RSI. Let me get rid of this. In the last 10 minutes, let's talk about trend lines, because I love trend lines. I trade them off them all the time. And if you can see here on Amazon, this is just on the daily chart. I have this trend line right here, right? And so far, price is holding underneath this trend line. I think I had one on SPY. I may have accidentally removed it before. Yeah. So let's take a look at SPY. So if we go on SPY, now for a trend line, you need 2 or more points, right? So right now, all I'm doing is I'm grabbing this high and I'm grabbing this pivot high right here, and should not be shocking that this pivot held right here, right? So even with just these 2 touch points, here's your trend line. So what does that mean? Well, you can trade trend lines. If you know we're in a downtrend, right? And we're making a series of, well, we were up, now we're starting to make some higher highs and higher lows, but still that trend line is holding. And you can see on SPY, I mean, it's 3 different times prices come right up to it and got rejected. So you can, if you anticipate, or if your bias is to the downside and you think that we can keep going lower, well, you could just wait for price to come right back up here to this trend line again, you know, and you can do, I'm showing you this on SPY, but you can do this on any stock. Come up here, hit this trend line, do a blind limit sell, right? And then stop somewhere up above this pivot, right? So you could, price came up here, you could do a limit sell here, price above this pivot, and ride it back down. They work on all time frames. I already had Amazon up. Let's look at AMD. Okay, AMD on the daily. I don't have a trend line on here right now, but would it shock you if I drew this trend line and AMD? Okay, now this is interesting. I'm glad I pulled this up. Here's the, check this out. This is kind of cool. So if we, using this trend line, we can kind of come up with a thesis now on AMD. So here's how I look to trade trend lines. So you can see that price held underneath this trend line all down through here. Now here it got close. It doesn't exactly have to touch, but this clearly touched, this touched. Price clearly interacted with it here and got rejected. What's interesting to me now is that price broke above this trend line. Okay, so think of trend lines again as nothing more than support and resistance lines. So what happens, this is a question for everyone to put in the chat here, right? So we just established that this trend line all through this downturn here was providing resistance, right? You can see it here, here, here. Now, what happens to previous resistance when it gets broken? Throw it in the chat. Yeah, previous resistance should become support, right? So support and resistance lines don't have to be just horizontal lines, right? They can be trend lines. They can be, this is an angled line. It doesn't have to be a horizontal line. So what's happening now? Think about this. AMD all through this downturn, this trend line held. Now what happened? It broke. Well, when support and resistance lines get broken, they are often retested. What's happening now? Price broke above. And this wasn't just a one-day break. If it was a one-day break and it came right back down and say, okay, that trend line wasn't broken, okay? A trend line is broken when there are multiple candles that break it and close beyond it, right? So I'm being specific by not saying, I'm being purposeful by not saying a daily, you know, it could be a 5-minute, 15-minute, doesn't matter the time frame. One candle breaking trend line is not the trend line broken, okay? Because price can come right back down. This right here is a break of the trend line. That is a bullish indication that price could potentially go bullish, right? But again, what happens? Previous resistance becomes support. So price gets broken, and now look what happened. It's right back down on this trend line. So it'll be interesting to see what happens with AMD in the coming days. Is this going to hold, and is it going to go back up? Right. So when I trade trend lines, and I can do this on an intraday chart, a 5-minute chart, doesn't matter, a 15-minute chart, when price breaks. So again, I always talk about how I don't take breakout trades. I always look for limit sells or a limit buy, right? In this case, it would be a limit buy. This candle broke. I would have been looking for price to come back down and retest this level and do a limit buy off of the trend line, because again, previous resistance should become support. That's now happening, right? So it'll be interesting to see what happens in the coming days, whether or not this level can hold. Get rid of this line here. Let me get rid of this. See, I had a trend line. Well, let's go in. I'm curious. I had a trend line in on the 5-minute today, I think. Yeah. So here today when I was trading, here, great example. Okay. It's trading AMD. This is the price action from yesterday. This is today. But if you notice on a 5-minute chart, look at this trend line that worked out, that connected yesterday and today perfectly. Right. And what happened? So I threw on these trend lines today because I was looking to take AMD long. Right. Did I get into the trade? What do you think? Did I get into this trade? Throw your answer in. Yes or no. Do you think I got in? Again, I'm waiting. So this 5-minute trend line here, which is 2 days of price action, clearly was providing resistance, resistance, resistance. Comes up here, resistance. But then look what happened. Let me zoom in here. Okay. Resistance, rejection, resistance, rejection. What happened here? Resistance, and then what? Sideways action, consolidation. So in the next 3 minutes that we have, give me your answer. Do you think I got triggered into this trade to go long? Give me a 1 if you think I got triggered in. Kyle Bennett says, yes, it looks like I got in. Anyone else? No right or wrong answer here, so feel free to throw in a guess. Rock says yes, he thinks I got in. Brian Davis, what do you think? Did I get into that trade? See if Brian's still here with us. Come on, Brian, did I get into that trade? Look what happened. Look at price action. So the answer is no, I didn't. So because I'm not a breakout trader, when this happened, right, here was my trend line. What I'm looking for is this consolidation here, and it got rejected, but then it finally broke out, and it broke this trend line right here, right? I've got a couple of trend lines. Let me remove this one just so you can see this clearly. I also had drawn another trend line coming up. So here was this, this area where price was getting really, really tight, where these two trend lines, one coming from below and one coming from above, where these trend lines were converging, right? So what I was looking for was because I don't take breakouts. I saw this candle. I'm like, beautiful. This trend line is broken. I looked for I was looking for this line right here. So this was the pre-market high. Once it got broken, I threw in an entry right here at 78.88. I just went right for that level here, stopped down here. I thought it would retrace, maybe not all the way down to the trend line, but at least to this level here, and it didn't happen. So because I'm not a breakout trader per se, with the, I should clarify that, with the funded account, I have had to become more of a breakout trader with the funded account. But typically